I said, I'm committed to changing the trajectory of this, and there are two ways to do it. There is through spending restraint cuts and through growth, and I think that is a very difficult calculus to achieve. We are trying to navigate that calculus. So, as you said, 3% growth will change the trajectory. What I've also said is we did not get here overnight. I have gained about 10 pounds since inauguration. I'm not going to cut off my arm to get back to my January 20th weight. I'm going to eat less, exercise more, and that is what we are trying to do with the federal government.
The first question is, will the big, beautiful bill add to the national debt? Yes or no? Is that a yes or a no? That's a no? Yes?
Sorry?
What did you say? I'm sorry.
It remains to be seen.
The global economic roller coaster is about to take another hard-dropping plunge. And this time, it is not just the Wall Street. It's braces for impact. It's your wallet. It's your rings, your groceries, and your future.
The storm is brewing in Washington as President Trump reignites his signature chaos diplomacy, threatening to flip the world order upside down.
A new wave of tariff is on the horizon. The dollar is crashing like a stone, and America is about to send ultimatums to some of its closest allies.
What does this mean for global trade, American industries, and consumers as a whole? In the word panache, guess who is footing the bills for you? Hello everyone, welcome back to my channel. If you have not yet, please subscribe to this YouTube channel for more trending updates on the US-China trade war and for your investment in gold and silver. Today we'll be delving into crucial matters of how the US and China deal is going to send the US to the grave. We'll be right back.
Trump's infamous act of the deal is back, and this time it is more squanch-head than strategy. With the China deal technically done, though not much has changed.
Trump is shifting his focus to US allies such as Canada, Japan, Taiwan, EU, Vietnam, and Korea.
Letters are set to go out within 2 weeks, delivering a stark message. Take the new trade term. The blanket tariff approach threatens a minimum 10% baseline on import, all in the name of reshoring industries and extracting revenue to pay what he calls a big butterfly bill. But let's cut the noise. This isn't economic genius, it is economic gamble. The tax on the US consumer disguised as a nationalist victory lap.
In May alone, the US government wrecked $23 billion in customer revenue, and it is only expected to grow potentially by $250 billion in a year for these countries.
And don't mistake that as the government efficiency. That money comes from you. Businesses importing goods simply raise prices, passing the burden down to the supply chain until it lands on shopping charts. It is a clever trick. Frame it as foreign punishment, but it is actually a backdoor tax on Americans to feel the deficit ballooning out of control.
Trump's bill had $2 to $3 trillion in national debt, and with a treasury borrowing already mixed out, tariffs become the funding crutch. That is not strength, that is desperation.
Trump's strategy hinged on a big assumption that countries will curve. But what if they don't? What if the EU, Japan, and others decide not to play Americans' game?
In April, US import catered a record 16.3% drop, with consumer goods plunging by $33 billion.
From a win, this reveals a chilling reality. American consumers are tightening their belts. The trade deficit may look better on the surface, but it is mostly because people can't afford to buy imported goods anymore. And for companies thinking of relocating production to the US, the math doesn't add up. Rising input costs, weakening domestic demand, and a higher operating expenses paints a black picture. Who wants to build in a country where your only consumer base is shrinking and the export advantage is gone?
Now, throw in the collapsing US dollars. The dollar index recently dropped below 98, a nearly 10% decline from its highs. This means higher import costs and weaker purchasing power, and even more inflammatory pressure.
Foreign investors' incentive to hold dollar asset is evaporating, especially when the looming threat of Section 899, which could slap a 20% revenge tax on foreign income from US stocks and bonds.
And yet, Treasury Secretary Bessent seems shockingly seemingly unconcerned. His recent congressional testimony was a big disaster, fumbling basic question about debt's impact on bonds.
He admitted that the deficit could hit 7% of GDP next year, an even worse number by 2028, all while pledging to run the economy hot at all costs. Here is what investors need to grab. The US is fast approaching a point where it becomes too unattractive to fund. Short-term bonds might yield 4% today, but what happens when the rate get cut as they expected to in 2025? Who is going to buy 10 or 30 years debt yielding peanuts in the market oversaturated with risks?
Federal Reserve can't control long-term debts forever, and if the market loses confidence in the US government fiscal direction, the bond market could face a serious tumult. Foreign buyers and investors are already worried and might ask for a higher demand return, or they may exit altogether. And when that happens, the US dollars won't just fall, it is going to collapse.
Janet Yellen recently warned inflation could spike by 83% in 2025. Food prices are projected to rise 5.5% and rent by a staggering 8.4%. These aren't luxury items, these are essentials. If Americans are spending more just to live, what happens to the rest of the economy?
Tariffs might push companies like Nippon Steel to reshore, but for others with options, betting billions on uncertain US slowing economy makes little or no sense, and the stakes are huge. If this tariff stays, consumers will suffer.
If they are repealed after relocation, those companies get burned. Trump trade ultimatum is bold, but it is also reckless. The tariff shock might generate revenue in the short term, but it could trigger a long-term damage to the US economy, especially as the dollar weakens and investors' confidence wanes. With a slow growth, rising inflation, and a budget deficit spiraling out of control, America may soon find itself facing a consequence of economic brinkmanship.
Let me know your thoughts in the comment section below. Will the war bow down to Trump's trade demands, or are they going to resist? Can Scott Bessent really ignite growth, or he's just pouring gasoline in a fiscal fire? Don't forget to subscribe to this YouTube channel and also like and comment on the video. Don't forget to subscribe to this channel and also like and comment on the video. Share to your friends and family members for more updates on US-China trade war and all of your investment in gold and mines and all mineral resources. See